Capital gains versus dividends. If you invest in stocks, you should know that there are mainly two ways you can: through capital gains or through dividends. In this video, we will compare the two and learn about their key differences.
Hello guys, this is Shweta and welcome to the world of WallStreetMojo.
What are capital gains? Say you bought a property for $500,000 and then sold it after some time for $750,000. What's your profit here? It's $750,000 minus $500,000, that is $250,000. So that is your capital gain, and the tax man will come behind you for their share of that amount. The same applies to stocks, bonds, crypto, and other financial assets. If you bought anything for a lower price and then sold it for a higher price for a profit, that's your capital gain. Capital gain are the amount that you have profited from any transaction. What is the dividend? Companies earn huge revenues each financial year, but most of it goes towards covering costs and the remaining is their profit. Now the company can do three things with its profit. 1. They can invest it back in the business. Number 2. They can keep it in the bank. Number 3, they can give their shareholders dividends. So dividends are extra returns given to shareholders of the company. Dividends are not mandatory and you don't need to do anything to get dividends other than owning the stock before the company declares the dividends. Difference between capital gain and dividend. Now that you know what capital gain and dividends are, here are some key differences between the two. The first difference between the two lies in the meaning itself. Capital gain are the increase in the value of assets, while dividends are the part of earnings distributed to shareholders. Moving on, capital gains depend on macroeconomic factors. There will be a lot in play before the asset appreciates. But with dividends, the decision lies in the hands of the company management. If they want to give out dividends, then they will. If not, then shareholders get no dividends. One important difference is that capital gain requires high capital and are taxed more. But on the other hand, it doesn't cost much to own stocks and earn dividends, which is also taxed less. You should know one thing about capital gain. The profit or the actual gains are made when you sell the asset and take the profit. While with dividends, the earnings happen at least once a year when the company declares the dividends. But in terms of payments, capital gain only offer fluctuations in the gain. But dividends can come with bonus shares, stock splits, etc. Did you know that Warren Buffett's Berkshire Hathaway is set to earn just over $6 billion in dividend in 2023? It sure pays to own stocks that appreciate over the long term. But it's also nice to get some form of cash flow from the investments in terms of dividends. So this will be all for this video on capital gain versus dividends. We hope you learned a lot. By the way, we regularly come up with such content on the stock markets and finance, so do consider subscribing to the channel. Don't forget to give this video a like and share it with someone who might find it useful. We'll see you in the next one.